In today's video, I'm giving you an update on President Trump's bold and sweeping bill, the one he famously called big and beautiful. It includes those massive tax cuts worth trillions of dollars. And just to refresh your memory because it's been a while, I'll show you a clip of what those original tax cut promises. So, please take a look at this video clip
that the president has laid out for members in that meeting today. No tax on tips, no tax on seniors' Social Security, no tax on overtime pay, renewing President Trump's 2017 middle-class tax cuts, adjusting the SALT cap, tax cuts for Made in America products. The president is committed to working with Congress to get this done.
All right, here it is. President Trump's bill. It's 389 pages long, and just like he said, it's all in the title. The one big, beautiful bill. In today's video, we're zeroing in on just one part of it, the tax issues. That's where we're going to focus. Okay, here's what we're going to do. I think the simplest way to give you an update is to walk through the most important parts in the order they appear. So, we'll go section by section and break it down as we go. All right? So, during President Trump's first term, he signed the Tax Cuts and Jobs Act into law back in December 2017. Those tax cuts officially kicked in starting in 2018. Now here's the key part. Most of those tax cuts are set to expire at the end of 2025. In fact, some provisions have already expired. And as you can see here, under current law, the adjusted federal income tax brackets and lower rates are scheduled to sunset after December 31st, 2025. So, President Trump is now pushing to renew the 2017 tax cuts through this new, big, beautiful bill. But if Congress doesn't act, those tax brackets will revert to the higher rates, the ones I've highlighted here in red. All right. So you see here it says current law. That refers to the original tax rates before any changes were made. When President Trump lowered the tax rates during his term, those cuts were meant to be temporary. Now, take a look at where it says Bracket 1. That simply refers to the first tax bracket, which means the income you earn in that range is taxed at 10%. You can also see the difference between the current tax rates and what they'll revert to if Congress doesn't pass the bill to extend the 2018 tax cuts. So here's the thing. If the tax cuts aren't renewed, meaning if this bill doesn't pass, the standard deduction will drop from this amount to that one. Just take a look. It's a pretty big difference. Essentially, the standard deduction would be cut in half, but the personal exemption deduction would come back. And honestly, if anyone actually remembers that one, I'd be pretty impressed. Now, take a look at this. A lot of parents don't even realize it, but right now there's a $2,000 tax credit per child. So, if you have 2 qualifying kids, that's $4,000 off your tax bill. But if the Trump-era tax cuts expire, that credit gets reduced back down to $1,000 per child. On top of that, this new bill actually proposes increasing the child tax credit to $2,500 per child from 2025 through 2028. Okay, here it is. Section 11,101. No tax on tips. Here's what it means. If you work in a job where tips are traditionally part of your income, you could qualify for a tax deduction on those tips. The Treasury Secretary will put out a list of which occupations are eligible. So, for example, let's say you earn $5,000 in tips. You'd still report that $5,000 as income, but you'd also get a $5,000 deduction, which basically makes your tipped income tax-free. So, it also states that highly compensated employees won't be eligible for this deduction. That's defined as anyone making $160,000 or more in 2025. The deduction itself would be available from 2025 through 2028. Now let's talk about the no tax on overtime part. Pay close attention because this only applies to the premium. That's the extra amount you earn for working overtime. And that's the part that would be tax-free. Let me give you a simple example. Say you normally make $100 an hour. For overtime, you'd get time and a half, so that's $150 for 1 hour. In this case, only the extra $50, the overtime premium, would be tax-free, not the entire $150. So, I'd say that's pretty clear. It's written right here. Qualified overtime compensation refers to the portion of overtime pay that's above your regular hourly rate. Also, highly compensated employees won't qualify for this deduction. Just like before, that means anyone earning $160,000 or more in 2025. This deduction would be available from 2025 through 2028. Now, moving on, seniors will get a $4,000 increase in their standard deduction from 2025 through 2028. Here's what happened. Republicans are trying to pass this bill in the Senate using a simple majority through a special process called reconciliation. But under reconciliation rules, they aren't allowed to make Social Security benefits tax-free. That option wasn't even on the table. So, as a workaround, they're increasing the standard deduction for seniors instead. Okay, here's an interesting one. You'll be able to deduct the interest on your auto loan up to a maximum of $10,000 per year if your vehicle was assembled in the U.S. They'll publish a list of qualifying vehicles, so you'll likely just be able to check right in your tax software to see if your car qualifies. This deduction will be available from 2025 through 2028. So, this deduction applies to cars, minivans, SUVs, pickup trucks, and even motorcycles. However, if you're a single owner making over $100,000 or married filing jointly with income over $200,000, the deduction will gradually phase out and eventually be reduced to zero. Now see, MAGA accounts. So, for U.S. citizens born between January 1st of 2024 and December 31st of 2028, the federal government will give each child $1,000 into their MAGA accounts. Here are the changes to tax deductions for state and local taxes, commonly referred to as the SALT deduction. Essentially, this includes property taxes, state income taxes, and local taxes, all of which are deductible. However, the total deduction for all of these combined is capped at $10,000, and that cap applies regardless of whether you're single or married filing jointly. There's a proposal to increase the SALT deduction cap to $30,000 for married couples filing jointly and $15,000 for single filers. This change would take effect after December 31st, 2025, meaning it would apply to the 2026 tax year, which you'll file in 2027. So, just to give you some perspective, we've covered about a dozen topics today, but there are over 100 topics in the tax section alone. I went through the table of contents myself. What we covered are the most relevant and widely discussed updates that I specifically wanted to highlight for you. Now, I want you to know two very important things. You have to understand this. So, the first thing is that this is not set in stone. This is subject to modification. They can make changes to this, like everything we just covered. And the second thing is that this is not guaranteed to pass. If Republicans remain unified, they can pass this bill without any Democratic support. However, it's important to note that achieving full agreement, particularly among fiscal conservatives within the Republican Party, may prove difficult. As for the timeline, the House aims to pass the bill by Memorial Day, while the Senate is targeting July 4th for their vote. So please take a look.
That third week, the Budget Committee will merge it all together and we can stay on schedule. So it will be up to the Senate at that point. He says July 4th because that's a big birthday for us, and everybody knows that. But I think, and I hope and believe that we can get it done sooner than that.
Now, Democrats argue that this bill could result in millions of people losing their health care, primarily due to the proposed cuts to Medicaid. Here's the reasoning behind that concern. Let's go over some of the key proposed changes to Medicaid. This isn't an exhaustive list, but these are the major ones. So, there would be a mandated 80-hour per month work requirements on able-bodied adults ages 19 to 64. So for those hours, volunteer work or school work, they would count towards that mandate. States would receive less reimbursements if illegal immigrants are receiving benefits. Eligibility checks every 6 months compared to annual beneficiaries over the federal poverty line would have to pay up to $35 per medical service. Now, I want to share what Speaker of the House Johnson has said about their goals for Medicaid. Take a look at his statement to understand what they're aiming to achieve.
What we're actually doing, Greta, is securing Medicaid. We're shoring it up. We're going to make sure that these essential programs are there for the people who genuinely need and deserve.
All right, that was the perspective from the House Republican leader. Now, let me share what the Senate Democratic leader has to say.
For months, the Republicans claimed that their tax plan wouldn't touch Medicaid. It's slashing Medicaid more than it ever has been slashed before. It's cruel, it's heartbreaking. Senate Democrats will continue to expose this devastating plan.
All right, that wraps up your update on Trump's big, bold bill. Let me know what you think. And please subscribe, press the bell icon. Thank you.